Okay.
Yeah, it's visible. Visible.
Okay. Thank you. Please keep your volumes off right now. Uh, we start the today's market talk. As I see it, this is a new era of opportunities. The reason is this geopolitical rift between West and China is a huge opportunity for India. There are challenges are there like trade tensions, technological changes, heightened cost of capital, interest rates, end of globalization, geopolitics, etc. And last leg of the globalization, India didn't benefit because we were out of the global supply chains and we didn't become a export powerhouse. But this rift between West and China is a huge opportunity for India. And the key issue is, if you remember, Nomura recently upgraded India to overweight despite the present valuations. So India should be beneficiary of China plus one theme. Uh, this Accenture's forecast for fiscal year 2024 raised concerns about dwindling IT spending, and that was the reason why the IT stocks corrected on Friday. And so their revenue forecast is around 2 to 5% only, which is below estimate. So one has to be careful about the IT services and consulting companies in India. Now, the other issue is Germany has technically slipped into a recession after two consecutive quarters of negative growth, and its struggles have persisted. So, the companies with significant exposure to European markets could suffer a hit. ECB, if you remember, paused its monetary tightening so as to support growth because they feel that it has got higher priority over fight against inflation. Despite that, the European PMI was 47 and GDP for Eurozone is expected to contract by 0.2% in Q3 2023. So what happened is, moment they paused the rate hikes, uh, euro weakened due to ECB's pause in rate hikes and the dollar strengthened, and that was one of the reasons why, along with euro and the Japanese currency yen uh, weakening, the dollar started strengthening. So future of eurozone is basically dependent on recovery in Germany, and Germany's future is closely tied with China, its primary trading partner. And Chinese economy is deadlocked as government is not keen on any SOPs or any money distribution to raise consumption. Hence, IT services, auto ancillaries, chemicals, pharma, capital goods, and engineering companies would be impacted. This recent softness due to higher oil prices, softness in equities due to higher oil prices is an opportunity to raise exposure considering all these factors in mind. Now, Vedanta announced a demerger of its business. So I will just present my view on that. What happened was the parent company's rating were downgraded, that is Vedanta Resources. It came with the news that it then subsequently it came with the news that it will do demerger of businesses. What is going to happen is there are debt maturities which are coming up in January and August 24. The group what the group needs is more cash, and a demerger only restructures the capital structure. So what is the basic fight about is about dividends from cash cow, that is Hindustan Zinc, which are presently going to Vedanta and then to Vedanta Resources. And Vedanta Resources, who have got a lot of acquisitions and all that, they have a lot of debt. Now, the problem for Vedanta is that because some part of that dividend or the profits go to the other minority shareholders, including the government of India from Hindustan Zinc, and then once the dividend comes to Vedanta, then it also goes to Vedanta's minority shareholders also. So Vedanta doesn't want to do that. They want to keep all the profits with themselves to take care of their debt liabilities. So what they have tried is they tried to buy the government stake in Hindustan Zinc. That they could not do because the government didn't agree. so that they can merge it with Vedanta and then keep all the profits. Just for your information, Vedanta Resources owns 68.11% stake in Vedanta, which owns stake in other operating companies. And the crown jewel is that Vedanta owns 64.9% stake in Hindustan Limited. So this is the whole fight about. Just the group's long-term debt maturities in FY24 is $4.3 billion. In FY25 is $4.1 billion. FY26 is $1.5 billion, and FY27 and beyond is $3.9 billion. So they need huge amount of cash. So cash will come if they sell some issues or generate cash. And here, just for your information, even because of they are distributing so much of dividend from Hindustan Zinc is also borrowing to do capex. So what the promoters of Vedanta would like to do is that they would like to raise cash and retain the control. Also, they retain the control over businesses, which both the things is not possible. So how it will benefit minority shareholders is difficult to answer at this time. The other point is rising demand for electricity will keep the demand steady for Coal India. The
Yeah,
electric,
coming to Tarun, Vedanta,
yes, sir.
do you think that the debt level that they have, can it pull down the Vedanta to bankruptcy?
They'll be rating. There was already a rating downgrade, right? No, it may not pull it to bankruptcy because then they will sell something, or they will, sell some stake. Yeah, the debt is somewhere around 70-75,000, the I think crore rupees,
Right,
and the Vedanta's their stake, sorry, in Hindustan Zinc is 84,000 crore. So they can
right.
just sell Hindustan Zinc and get rid of their debt. And then the other issue is what is going to happen is once they will restructure, how much how much debt of the whole conglomerate is going to be put into which company
It will be
is not
yeah,
known as on date.
yeah, okay.
So what will happen is like what happened with Piramal Enterprises demerger. What Piramal Enterprises did is they put the whole debt on Piramal Pharma, and then the Piramal Pharma corrected badly. So that is not known. So and that is going to take place in next 2-3 years. And firstly, the government has to give permission, right? And now they are talking about demerging of Hindustan Zinc businesses, silver and other businesses also, copper and silver businesses also. So all these things, till the time there is no clarity, it will lead to speculation and prices will just keep fluctuating. So want this is like a casino now. So nobody knows what is going to happen, and there is no clarity, right? They will come up with some issues, but research on this issue, people will realize that there is nothing much of value to the shareholders as such out of this. So that is the point.
Yeah, okay. So that means the conclusion is that Vedanta basically is not very friendly to the minority shareholders.
वो तो
That is
आपको
one.
पता ही है सर. He was trying like around 10 years back. They did a merger of all the businesses into Medanta,
Yeah,
right? And they justified that also. And again now they are doing demerger, and that is also justified. Now the value unlocking is take place. I am not sure because uh, the other businesses are not doing that good. So it is not as if other businesses are doing something great and all that. So that is my only point, and they wanted to. I think Vedanta Resources had bought some mines in Africa, and they wanted Hindustan Zinc to give them the money to and take over those mines from them. But the government refused because that would have reduced the dividends which were emanating to the government from Hindustan Zinc. So it is not a clean affair. So better is to avoid such
yeah,
stocks.
and I have one lot of Vedanta. I use it for option trading and all that. But
But-
basically, this value unlocking at this stage, the way they are going about it, just a gimmick. but इनको किसी तरीके से और पैसा क्रिएट करना है कैसे हाउ टू एंड
नहीं सर, वैल्यू अनलॉकिंग से पैसा कैसे आएगा? वैल्यू अनलॉकिंग
that
से
is what I have not understood. No,
हाँ.
value
So
unlocking means if the valuation goes up, then obviously it
No,
means the individual. It's right now Vedanta is a sum total of the whole all five businesses. Right
see, the
now it
issue
is a
is
discounted price. When you
presently
are doing a
say,
sum total, when you
yes, sir.
total up the parts
Yes,
and
sir.
then do the valuation, there is a discount. But when you separate out the parts, then the discount is gone, which means they are hoping that the individual shares will be valued better. And
That's fine. So if the present Vedanta is at 220 and the sum of the parts become 300, right? But from that they don't get any cash to pay their debt.
yeah,
On that they will have to still sell some businesses.
yeah, true. I mean, otherwise, the cash only comes in case the valuations of the demerged entities have gone up and they are able to sell this stake.
And then once you are in dire need of money, all your distressed sales are at lower prices than otherwise, right? And who is there? If there is a credit rating which is downgraded, then they will get the money also at higher interest rates
Yeah,
for
that is
future.
true. That is true. That is true.
So
The
that is a
rating,
huge
the
risk, and
rating is downgraded, but I don't think they have come to the distress selling part of it. I mean, right now, I don't think that
they are
situation.
waiting. They are waiting, and then you see they had huge plans for semiconductors and all that, but chips and all that, nothing happened,
Those have
right?
been grounded, no, already because
Anji. So the point is, the history is that minority shareholders don't make any money in such kind of thing, and there is unknown. It's just you're just betting on a thing which is not known.
better to better to stay away.
I also feel that way till the time there is clarity. Baki, the stock can go anywhere.
Yeah.
So that is the point.
No, stock also will not go anywhere because for whatever reason, I mean, Anil Agarwal is a well-known person and not very friendly to the minority shareholders, so stock will not go up too high.
Fine, sir. So Coal India, sir, electricity sector's coal requirement is projected to be 1 billion tons in FY30. So there is a change in estimate of the requirement of coal for India because of higher amount of electricity requirement, and so it is likely to increase by around 25% in FY30. That is the assessment. So it is expected that Coal India may report a volume CAGR of 6% over the next 2 to 3 years, and that is why there is a re-rating of the stock, and the stock keeps going up. So it is better to be with such stocks. Now the other good stock is NTPC, which is embracing renewable power generation and steadily expanding thermal power capacities. The stock was in doldrums for quite some time. I will cover this technically also because of ESG issues, and the foreign funds were not buying this and all that. But it is up 40% in this calendar year, and it will report revenue growth of around 6 to 7% in FY 23-25, and EPS growth of 9 to 10%. And it is still, uh, if you have to say it, it is still undervalued because for last around 15 years or so, it has not moved anywhere. So that is the point. Now, certain technical issues. This is the dollar index 1 day charts. So if you see, the dollar index has broken out, and the 20 EMA and 50 EMA are breaking out above the 200 EMA. So it's on uptrend now. It went to around 106, and it is likely to be strong unless it corrects. So right now it is strong, and hence it is expected to be remain strong. And if because there is a euro weakness and yen weakness, and the Chinese currency is also weakening, so one has to be careful about dollar index. Next is US 10-year yield. A monthly chart of US 10-year yield. Again, it has gone up to around 4.575, and it is again trending upwards. So it keeps moving up. And again, here also, again, if you see, the 20 EMA has broken through the 200 EMA. So that is again a positive sign. So the yield is expected to be going up. it was trending downwards over so many years, and now there is a, change in trend from the last 2 3 years now.
It's a golden crossover now for it.
हाँ sir, 20 EMA has crossed
Yeah.
200. 50
50
is
has
still
crossed
below, so
200, is
50
it?
has to cross.
Okay.
Now the Brent crude, again the same, right? So the Brent crude touched around 96. So again here, again you will see to 20 and 50 are again crossing the 200 EMA, and it is again going up. So these three things, dollar index, Brent crude, and US 10-year yield, in case they keep going up, it's very difficult for equities to go up. Now let's see gold. Now, gold made this high of around 70 dollars to a ounce in around 2022. This was happened at that March, at the time of the Russia Ukraine conflict. Then it again hit that mark and corrected, because this is where the selling comes at this level. If you see the rising trend line, it has broken through the rising trend line and it is headed lower. So my view is either it will come to these 1800 levels, or if it corrects more, it will come to this 1640, 1700 levels. So one has to see it as a good thing, because the gold is correcting now at the time of the
Festivals.
festival season in India. So it is good for people buy some gold. Uh, Nifty, if you see Nifty one day, again, interesting chart. Last 1 week, it was stuck between 20 and 50 EMA. It just kept moving in between, and it faced resistance at 20 EMA and took support at 50 EMA. So 50 EMA is around 19,550, 561 here, and 20 EMA is 19,720. So this is the range right now. Even if you see on Friday, it went up and then came down in the end, and the same thing is happening. So it is just range bound right now and waiting for a move any direction. So in my view, I think the base should be somewhere around the last low, that is around 19,200 to 50 levels, and upside we can go anywhere. So
So
if you see,
here, just Tarun, one sec. The international indicators point out two tough times ahead. No,
true,
oil is up, U.S. dollar index and all that, but
yes.
we are at a divergence. It seems.
Slightly because of liquidity. Because of liquidity which is coming from the domestic money,
Yeah.
right? So that is the divergence, but that is why I said that even, and then there are some kind of upgrades, like I told about Nomura upgrade, and Morgan Stanley has upgraded and all that. So these are the things. So we are not falling drastically also, and not going up because of these constraints. Now, if you see the weekly charts also of Nifty, right, again the same issue. The trend has stopped, and there is a pause, it seems to me, in the trend right now. And again here for weekly chart, this 250 levels is that 20 EMA, so there should be the kind of support we can have. Right? Let's see the option chain data. This is interesting. If you see on the put side, the maximum put writing is at 19,600, and maximum call writing is at 19,800. So that should be the range. The premium here is 27 and the premium here is 56. So subtract 50 from here and add around 30 here. So 19,830 to 19,550 should be the clear range from this. And it's very interesting to see. You see, there is a lot of call writing which has taken place even at 19,600, and the change in OI is not much. So people are still sitting strong at 19,600 call option also. So with a premium of 119, so they are not that concerned, because the spot is 1630, 60. So they must be still thinking that they can still get away with it. So it is not just that easy to for the index to move up.
So this
This is the
200 point range is for short term, long
for
term,
1 week, sir.
huh? For a week or something.
Next week.
Next week, okay.
This is Nifty's option chain for expiry for the next week, sir.
I got it. I understood.
Okay. Now the put call ratio, it's around zero point 0.8. Put the total number of puts divided by total number of calls. So it is around zero point 0.8. So it is not very bullish or very bearish, right? That so not so more. There is more of call writing. So you can decide as to on people are slightly more skeptical of taking of being bullish right now. So the key problem is Reliance here because it is at exactly 200 EMA right now. 200 EMA is around 23,337. It's at 23.45. It is taking support there. It went below this slightly on Thursday and rebounded. And this latest, the government order on gas price, natural gas prices is negative for Reliance because they were getting around $12 per MBTU. Now they're going to get 9 or something. So it is negative for them. So be careful. Nifty Bank, it is clearly below the 50 EMA and it has not been able to breach the 50 EMA throughout the last week. So, in the daily chart, so if you see, this is weaker than the Nifty, and the reason for this is the weekly chart again, it is exactly taking now support at 20 EMA weekly chart, and it can, if it breaches, then it will go down to the next support, that is 50 EMA. The reason is this HDFC Bank. This was the rising trend line from the last bottom. Now this was at around 1560. It has breached that. Now the last week it just moved around 1525. My view is if 1525 is broken, then it will go down below 1500 and may go to move between 1450 and 1500. So this is a critical area if case it is able to hold on to this 1525 level, because this is the where it was stuck for the whole week.
Yeah, I had a lot of you must have seen that I had huge positions in put selling in the HDFC Bank.
Hmm.
So it created a lot of problem for September expiry. I had to book a loss of about 4 5 lakhs in the HDFC Bank. But actually, this is for the people who are into the option selling. That when I knew that HDFC Bank is now bearish, then I started selling calls. For
Yes.
example, I had sold four lots of puts at a certain expiry. Against that, I sold 8 lots of calls.
Hmm.
So that I tend to partially recover the money, but it cannot fully recover the money, but partially offset my loss.
Yes, sir. This selling this 1700 call is a very safe option, and November call was giving good premium around, I think, 8 odd rupees. So that was a good trade and a safe trade.
I had a lot of positions at 1600 call.
Mhm. Okay. So that was the issue. Okay, let's go ahead. Now I was talking about ICICI Bank. This is the other problem. In my view, here the critical level is 1950 level. If it above that, it may go up to 1960 level, and where it faces resistance. Below the 1950, it may take support from its 200 EMA, which has now come very close to around 1920. But for long-term investors, in my view, I think this should be a good level to enter this stock. So these are the two stocks which are weak.
When was the last time ICICI Bank was at 950 in terms of dates?
950.
Yeah.
950, if you see here, it has been moving up from here only, sir. Otherwise, it gets stuck here.
Yeah. What date are you
August.
talking about? August.
Then it was there in July also, right? Once it then it was there in June also. So it went up after March. It went up to 1950, corrected from there. Then it took support at 1950 level. Then there was a swing up to 1000 odd level. Then it corrected again to those levels. Then again there was a swing from these levels to around 980 plus, and then again it has corrected, and now it has come down to 1940 level. So one has to be slightly careful. But so this 1940, 1950, 1960 is that supply zone which is coming up from here. So if it takes support, then it goes up. So
Actually,
one has to be careful with the trades here.
correct. My holding is at about 19, sorry, 925, between 925 and 950. I
That
think
is
I think it's worth buying now. It's a good, damn good stock.
200 DMA should be a good support, sir. Okay, PSU banks, they continue to be strong. On Friday, they had a positive session, but again, that uptrend has slightly paused, and now it is again, flat line or a sideways this thing. And I think this will wait for the moving averages to catch up again, so that to start the next up move from here. But it is not negative right now. So PSU bank is a clear decent trade. The other
Can you
strong,
just go into specifically into Bank of Baroda and Canara Bank?
I'll cover it subsequently, sir. Now, the other good stock is this
REC?
PSE index, public sector enterprises, and it is at lifetime highs, right? And again, it had a positive session on Friday. The reason is because of NTPC, Coal India, and REC, PFC, they had solid sessions on Friday, and this is the reason. And all the HALs and BALs, everything, all the shipbuilding guys. So everybody is very positive on PSC index and Coal India also. So this is a sector to remain invested in and positive. Next is, I'll just cover REC also. This is a weekly chart of REC. You can see it was earlier a kind of a dividend stock for a long time. And after that, there is a re-rating, and now the stock from around 120 odd levels has gone to around 280 odd. And it is clearly above the all the moving averages and had a strong week. This is a weekly chart, so it had a strong week for last 2 weeks was strong, and this is a stock which is reflecting in the PSE index, also the strength of the PSE index. Now
एक
this
आपका
is
PSC के बारे में तरुण I just wanted to talk about it. I have always been of the opinion that PSC stocks were grossly undervalued. This has been the case, and therefore, instead of investing in the individual stocks, I invested in the PSC ETF. Quite a bit. Now, we know that the public sector work culture has been bad already. Always, we are aware of. We have dealt with the public sector industry. What has exactly happened that all of a sudden everything has changed to at such drastic levels? But मतलब अब तो इनकी कोई लिमिट ही नहीं है. They are touching the sky and all. What really has happened? They are the same people, same machinery, same companies which were grossly undervalued, which were, everybody thought they are lethargic, they will not perform and all. अब क्या हो गया? Basically, why public sector undertakings have started performing so well, and why public sector banks have also started performing so well? What has been the basic change?
Sir, one issue is, let's talk about public sector banks, right? Firstly, their balance sheets have improved. Now
NPAs have been reduced. Yeah. Okay.
there were mergers, right? And so they are stronger now. Plus, there is a better, matlab, they are now cleaned up their balance sheets and all that. So now the culture has improved, management has improved. Now they are competing, and they are trading now much better. There is some digitization and all that issue. Revenues, they are becoming profitable. So that is about them. Now about all these defense PSUs, they are now started getting orders from the government. Earlier they were importing. So that is another positive thing, because once they start getting big orders and technology, so and they have started exporting also. So that is one. Now in this REC PFC, they have been told to do this renewable energy lending and all those issues. Hence, they are doing well. Now, what happened with BHEL and NTPC was, for around a good decade or so, in India we didn't add any power capacity. And so these were in doldrums and with all kind of problems, transmission and other losses. And now suddenly if we are going to add capacity, and we have realized that coal is going to be the thermal power is going to be the source of power for a long time. uh, they are come back to prominence, and now you can it is reflected in their stock prices. If you see NTPC here, this high was achieved in 2008 or 2007 end, right? Last bull market. And then it consolidated for full 15 years. And now it has crossed that high of 245 odd, which it had achieved. So there is a change in work culture, better accountability, orders, profits. So the main issue is they are making profits. Plus, they are underpriced. Now, they if you are they are inexpensive in an expensive market, people start looking at stocks which are inexpensive, and that is one of the reasons why these stocks are doing better.
In terms of public sector banks, I think earlier culture of political diktat about giving the loan
Yes,
to
sir.
the industrialists, that I seems to have stopped.
Yes, sir. I'll cover Union Bank today. We will see that that is evident from the this thing, and there is a growth. The main issue is growth, because earlier what was happening was there was no growth, so they were just frittering away the money which was, and every time the government had to recapitalize them. Now, if you see Bank of Maharashtra, Union Bank, they did their own fundraising, QIPs, which is a big thing. Otherwise, earlier what used to happen is there used to be a sale of these PSU assets, and the LIC and such kind of people used to be buying them. So, and REC was sold and PFC bought them, and all those issues took place. HPCL, some stake was sold and ONGC bought it, and all those issues. So now that has changed. And that's the key issue. So I think it is for better, because they have a lot of potential.
Even consolidation of banks seems to have contributed to it.
Yes, sir.
Smaller banks being merged.
And they have moats in their respective field, right? Like, who can compete with NTPC in terms of power generation, or HAL in terms of making aircrafts, or any of these shipbuilders, or BEL, or any one of BDL and all these people. So they are monopoly businesses, or railway stocks. Like, the best example is the railway stocks, right? And now they have started getting orders. There is a railway upgrade which is taking place all over. So this is one of the reasons why you see railway stocks which were IRFC used to be around 20 rupees stock. Now it is doubled or become 4 5 times. Similarly, so this is the basic issue. So let's see till the time this lasts. Okay, IT, as I told about Accenture thing, now it has come back to its trend line support, upper trend line support. So let's see what happens. I think it will peter, or it will be around here, or maybe a dip little bit below to its IT index will dip below to the 20 EMA, because they will wait for the results to come and see what is the guidance and what is the uh, what is the management are speaking and all that for future and all those issues. Otherwise, this will just wait for it to clarity right now, because after the essential guidance and all that, things are people are not now cutting down their future guidance and all that.
तरुण, इसमें भी थोड़ी डाइवर्जेंस है इसमें आईटी में भी. You see, the large cap stock, Infosys and TCS are not. TCS is doing well. Infosys is not doing so well. But the mid cap stocks like the LTI, LTTS, and one or two persistence, okay, they seem to be doing pretty well.
Actually, sir, I did an analysis yesterday of stocks which have moved from small cap to
Mid
large
cap.
caps oblique mid caps,
Ah, yeah.
right? In India. And there are only, I think, two stocks which I found in IT. One was Persistent, other is Tata Elxsi,
Yeah.
and the balance are all these Adani stocks. Rest, everybody is where they were, but the major increase in market cap, and it is just because of business performance and all those issues. So that's why I was talking about Cyient and KPIT, which I feel are likely to do better. So this is a thing, but all this Infosys and TCS had also run up a lot, right? So now they are giving back some of their gains. So let's see where they move. Now, this is that momentum index, BSC momentum index, which I find very interesting. So this is a monthly chart. So you pitchfork it, the middle part or middle line of the pitchfork is generally the resistance. So it is trying to break that resistance, and it has not corrected. So I feel that these momentum stocks, and they are on constant uptrend, and the uptrend has improved in September. So I'll just show you which are these momentum stocks. These was the results on this was what was their position on Friday. So if you see, only three were negative, and the balance 27 were all positive, had a positive close on Friday. So it is these are the stocks which you should be keeping an eye on, and this is where the momentum is at as on date.
Even Cummins India is in this momentum stocks.
Yes, sir. It has moved up a lot, sir. Only thing is that I told that day on Friday also that 1650 around that day is a 200 is a good level to enter, and it went there and then bounced back from there. So this is the again a good one. If you see,
Cummins, I lost lot of money when I sold puts of Cummins at 1800, and then I went to and sold the puts now at for October for 1600. So I hope that that will stay put. That will
Because
make money.
there is a downgrade because there is a problem with their exports. Though the domestic part of the power generation or the generator part is doing well, but there was a some downgrade. So I was hoping like health that it will downgrade, so it should correct a bit more. So 1500 should have been a good level to take a investment position. So
1500, na?
6
1500.
15 1 5.
Okay, I had taken it at 1600.
मतलब that is a trading position, but investment position, a safe position is around 1500. Like if you see, I had discussed about that Salman stocks, right? So this is there, right? LNT and out here. So this is what it is. All of them are doing better. Now, the mid-cap index, the BSE mid-cap index, now it has halted its uptrend. So, in my view, I think there is a change in now uptrend where people are realizing that it has gone up too much. Hence, I had given a call to book some profits, and it is now consolidating. So, it has now come to its 20 EMA, and let's see what it happens. So that difference, once the stock goes up from the moving averages, it becomes expensive. So once it comes back to the moving averages, then you can start looking at it. So that was one call. The same thing is with the small cap index. Again, now if you see, it had gone up from its moving average, then it corrected on one day only, and now it is moving around in this level, and it's a big index. So let's see what happens. Now let's discuss few stocks. First one is Kajaria Ceramics. It is primarily engaged in manufacturing trading of ceramic and vitrified tiles. Tiles exports from India are likely to grow 20% year on year to rupees 21,000 crore in FY24, fueled by improving demand in countries such as Mexico, US, UAE, UK, etc. Kajaria benefits from superior distribution strength and higher ad spends. You must have seen that ad of Akshay Kumar, who was there earlier, and now I think that Ranbir Singh has joined him in those ads. So they spend a lot of money in their ads, and I think Anushka Sharma also sells one of their products. It also helps to command a pricing premium over its competitors, and it is gaining market share. It has been generating free cash flow since FY16, which is likely to continue going forward. So it helps in keeping their debt low and help them in capex. The return on capital employed is projected to be around 22, 25, 27% in next 3 years versus 18% in FY23. The average is around 20% over 18 to 22. And despite possible rise in fuel prices, the increased average consumption price for Kajaria will be about still 20% lower than its average consumption price for FY23. It is because they have switched from natural gas to propane now. All of them, actually, all the tile guys. Now, this is their quarterly results. So, if you see, there is a regular rise in revenues and margins which had dipped uh, have now improved, are improving now to 15 to 16%, and profits are also good, and EPS is rising. So it's a good business, and it will be held by the real estate boom. So what is expected is for FY24, the because the domestic sales are not much, so the growth is expected to be muted around 9 odd percent for FY24, but FY25 and FY26 is supposed to be 11 to 12%, and the margins are improving, and they will improve because as they become more efficient and economies of scale comes into play, and profits are supposed to improve. PAT is improving, and the net profit is also improving. And if you see the ratios, the consolidated EPS is expected to be around 35 or 42 in FY26 and FY25. So the part is going, PE is going to come down. So from the present levels, though it has traded at very expensive valuations earlier, and ROIC, as I said, return on invested capital, ROE, ROC, all return ratios are likely to improve now only, and working capital days have decreased. There is no debt. So this is what I was saying, that because it's a free cash flow generating company, so they have adequate money for their capex. So this is their chart. So if you see, it has now come down below its uh, 20 and 50 EMA. The main reason is because this year is expected to be slow growth, and I would buy it at around 200 EMA if it comes to around those levels, which I feel on it is heading towards that because it is heading downwards. So it is not like a blanket buy kind of thing, because if you see FY25 EPS of around 35, at around 35 to 40p, it should trade around 1250 to around 1400, where it had reached, and now it is correcting from there because the business update is slightly weak. uh, they have good around of dealers and all that, and they, as I brought out, they are gaining market share. Now the other stock which I wanted to cover was Union Bank of India. Again, an interesting stock. What I found good about it is that it successfully raised equity capital of rupees 5000 crore through QIB on 25th August 23. Earlier used to happen was that there used to be, taxpayers money used to be sent, and or they will raise equity capital by selling stake to some LIC or something like that. It is still inexpensive at zero point 0.8 times FY25 expected book value. Management has given a double digit 10 to 12% loan book growth guidance for FY24. Uh, as of June 2023, bank has garnered total around 11 lakh crore worth of deposit, which is up 14 odd percent year on year and 1% Q on Q. CASA and retail term deposits together are up 73%, 73% of total deposit profile of the bank. The management has set a target of 1% annual ROA, return on assets, by end of FY25, and there is an improvement in asset quality, which is a key issue why the stock has done better. Like if you see now, the revenues have improved, so that means they are earning more interest. This bank has turned profitable now. Financing profit have come up, and considering everything else now, their profits have improved, and EPS is also improved. So this is the one of the main reasons. Once they become more efficient, cut down the waste and all that, so what is expected is deposit growth of as of so and so as of June 30th was around 13%, and guidance is around 8 to 10%. Advanced growth is again the same because this is the guidance they are given. NIMS are healthy, come down above 3%, so they are expecting around 3%. Gross NPAs have come down and they are guiding for below 6%, net NPAs below 1%. Slippages have come down, but they are expected to be, as they will lend more, so slippages will be more, but they have adequate money. So if you see here, the EPS is expected to be around 18 rupees for FY25. So the PE will be around 5 at the present. Adjusted book value is around 116. So, and they are dividend givers around they give around 3-4% dividend. So if you see the cost to income, CASA, CAR, Tier 1 capital ratios, they all improved. Hence, in my view, you can easily give it a fair value, that is 1 times FY25 book, which is around 160. So it should head there. So if you see the chart, uh, it has now broken out from after this was the level at which they had raised capital in end August, 25th August, 26th August. This is where I had given this buy call, that now it has been able to raise capital, so it should now do well, and then it has gone up from here. And right now everybody is positive, and it is still below the book value. So I feel that it can easily go up to 116 levels from here in this uptrend. So every dip is a buying opportunity to 20 EMA. Now, if you see the monthly chart of Union Bank of India, this was the declining trend line, and it has broken through that. So it is expected to do better, and this is once it crosses the long-term 200 DMA, it is that is 115, 116. It may head higher. Nobody knows. And if you see, the volumes have improved. Even in the last chart, you will see it has gone up on higher volumes, and it is higher than the average volumes it used to have. Now it is going up on higher volumes, so that means a stock which is going up on higher volumes, there is a positively, and there must be better delivery which is taking place. Uh, Now I'll cover Narayana Health. It's again an interesting stock. It has a network of multi-speciality and super specialty hospitals spread across multiple locations. It has a strong track record of providing quality healthcare services at an affordable cost. It was founded by Dr. Devi Shetty in 2000 and is headquartered in Bengaluru. It has a strong presence in the southern state of Karnataka and eastern India, with an emerging presence in western, northern, and central India. So they are growing to other cities also now. They had their main headquarter, or the main hospitals were in Bangalore and Calcutta. It reported impressive performance at its flagship hospitals, healthy revenue growth coupled with increasing average revenue per occupied bed, and EBITDA, that is operating profit, lifted its overall performance. The company's flagship units in Health City, this is in Cayman Islands, are running at optimum utilization, and next phase of growth would come from changing payer profile of patients, increasing proportion of high-end surgeries, and efficiency in systems with high bed turnover discharges. Now they are doing an interesting thing. It has taken significant strides towards diversifying its portfolio by submitting an application to Insurance Regulatory and Development Authority of India, that is IRDA, for bundle insurance plan. So what it wants to do, it wants to get into health insurance. So it is able to better manage the patients through health insurance also. So once a patient takes health insurance from them, and then they will provide the medical care and all that. So they will go to adjacent side of the business also. Now they've got a lot of skilled doctors, efficient businesses. I think they are very good in cancer care and cardiac care, and it, because it wants to bridge the gap between healthcare services and insurance, so it is doing this now. And near term, all the new hospitals will improve, and they will start also becoming as profitable as the other ones. So if you see the uh, quarterly results, it is on an upward path, and cost of healthcare is as it is going up. So the margins are 20% and above, stable and improved, and net profit is also improved along with earnings per share. And if you see, the net revenues are expected to go up around 22%. It went up 22% in FY23, and next 2 years it expected to go up around 10 to 13% because of new hospitals which are coming up. So they take time to stabilize, and the PAT growth is around same now. This is because they were earlier in losses because they were doing capex. So there the income was less, and margins are also going to improve now. And EPS is around expected is around 33. So I'll just show you their relative valuation. So if you see, this is Narayana Shudyale. The P wise, if you compare, they are at around 32p, while rest everybody is at 40 plus, and Apollo is at 110. So this is the reason why I was recommending this stock. And you see their profit in the last quarter, sales in the last quarter was among the best. Operating margins are as good as rest of the uh, industry, and ROA is also quite good. Hence, this is a stock which is a good stock to be invested in. Now, this is their chart. So if you see, this is the level where I was got interested around 1000 odd. Suddenly it went up once on a Monday, and now it is being corrected. So if it comes to around this 50 EMA of 1030 odd, so this would be a good entry for long term. Now I'll cover quickly the quick heals. In my view, it's a not a good business, and they're running loss. Their operating margins are negative, and their operating profit is not there, so their expenses are more. They sell basically antiviruses, and net profits have declined, and EPS is negative. And so, if you see their chart, it was just doing nothing for some time, and suddenly it perked up on Friday and Saturday. Sorry, Thursday and Friday last week, with higher volumes here. The news is only that their original PE investor, that is Sequoia Capital, they exited quick heal by selling three whatever stake they had of 3.4% at 240. Now, after that, who has bought and all, I'm not sure. And the news is they gave a disclosure that they're in talk with other PE guys for investment and all. So suddenly this stock shot up, and I found this was a very popular stock on all the Twitter also. So the whole fraternity was positive on this stock. So one has to be slightly careful with these stocks, and because there is no fundamental reason for it to go up, that's why I was interested in finding out what is the news on this stock. So I have finished.